How's everybody doing today?
I'm good. We are slowly starting to get people in. So let's give them like 2 more minutes, Tone, before we start off. I haven't heard back from Joe, but I have invited him. Hopefully, he will be able to join.
All right, we'll see if there's anyone in the audience that could join us for a nice
Oh, yeah,
discussion.
100%. Let's give them 2 more minutes. We'll start off at 5:08.
So I'm looking at the pinned tweet, but that chart, but the legend's missing, right? So what are those lines? The bar chart tweet forgot to put a legend in.
Well, let's try to make sense of it. I think it's the inflow of each year. So the inflows on tech for each year.
Oh, okay. They're per year, inflows on
Yeah.
tech per year. Okay, so we're crushing it this year.
Oh, we are crushing it. That's my main topic for discussion today, at least to start off with, and then we'll go obviously deeper into other stuff as well. So let's start off, Tone. It's 5:07. We are kind of behind time, and we need to cover a lot of stuff. So, guys, I'll start off with the introduction. Welcome to the Financial Summit weekly spaces. We basically host two spaces a week, one in midweek and one end of week, mostly Sundays and Wednesdays, but it does move at times. Uh, we basically so if you guys you haven't visited the financialsummit.com, please do visit it. We are an event that happens on yearly basis. The next one is being planned for Maldives in March 2025, where you'll get to meet hedge fund managers, money managers, traders, VCs, nutritionists, breath teachers, and a lot of people from different side, different professions. And the aim is to be able to sit together and learn from each other's qualities from their own professions and try to see how we can get better at what we do. So when you meet hedge fund managers, you learn how do they manage their risk, how do they manage their money. When you meet the traders, you kind of learn how to different trading strategies, intraday, end of day, depending on how they do it. And yeah, it's a very great exposure. So Tone, how is the Maldives event looking, and when can we expect it to be live on the website?
Yeah, it's looking really good. I will be signing the contract next week, ironing out the final parts. We may not post the dates until a month from now because I don't want to confuse people. The dates are going to be in March of 2025, and if I put March 2025 on the website right now, people might get confused thinking it's March of this year. So we may wait until, uh, like March 20th, and then post the actual dates up there to avoid any confusion. And and then going forward, I'm gonna immediately start working on a future venue. This way, people know the financial summit is coming exactly 1 year in advance. So this one is going to be in March of 2025, and I'll immediately start planning for like November of 2025 as well. So we'll try and get two done in 2025, taking advantage of the nice bull market, not only in Bitcoin, but also in the traditional markets.
Well, so this is the bull market play, is it, Tone? We meet as much
Yeah,
as we
and
can.
right, and hopefully the world is not engulfed in World War III.
Oh yes, that's the biggest hope I have as well. So Tone, let's start off. Let's see, guys. By the way, we are an open space, so if you have any questions, feel free to either post them in the comment sections, or if you basically have want to come up into the space area and talk to Tone and put a question in front of him, feel free to do that as well. You can raise your hand if your profile is uh, genuine enough for me to see and to be able to make sense. It's not full of some gifs and some. Trolling, I will surely invite you up and you can ask your questions. So, Tone, first things first, I have put the tweet. Black Swan ETFs have plunged. Sorry, the bar chart, the first one. Did you post the second one, Tone?
I posted the second one because I was on the bar chart account looking at the
Okay,
first tweet, and I saw
okay.
the other one, and I thought it was great because
Let's start off
we
with
can talk
that one.
about that one first, the Black
Yeah.
Swan one first. As anyone that's followed me for a decade now know how much I hate gloom and doomers and how much I despise their, let's say, trading advice on holding assets because they always expect the stock market to crash. So apparently, there is an ETF that is focused on black swans, and that ETF is now down 99%, a black swan ETF, which I find absolutely hilarious because I always tell people don't ever follow like stock trading advice from anyone that's a gloom and doomer.
Okay, makes sense. So down 99%. That means nothing bad. All good, right? Okay, so Tom, let's move on. Let's move on to the main topic. I mean, this was important as well, but let's move on to this topic which I've posted. Tech funds are on track to see inflows of 85 billion this year. That's an all-time high. And when we are talking about when we are saying that it's seeing an inflow of 85 billion this year, that means year to date annualized, right? That's what we're talking about. So that's a lot of inflow, Stone, and we are seeing that reflecting the markets as well. The markets are ripping. We are seeing healthy uptrends in both individual stocks as well as the index, because the index will go up if the individuals are going up. So what do you make out of this? Like, is it a proper bull run now? Like, is it not like a fake high that is being created in Nvidia, and it's a proper bull run?
So okay, now that I've had a minute to think about this, I don't like this chart at all. They are trying to analyze something based on a month of data. Okay, like I'm not, it's the middle of February. I doubt they have any February's data. So they're trying to, like, this is why I really don't like bar charts Twitter account. I've seen it make so many logical mistakes in their charting that I've complained about to them. And I'm like, bar charts needs to learn how to read charts or rename their company. So you can't annualize off of January's data. Okay, it's very possible that the 2020 inflows in January were higher than the January inflows of this year, right? You can't annualize it like that because what if everyone invested everything they had this January and not another dollar comes in into tech stocks the rest of the year? So then you take the 84 billion and you have to divide it by 12 months. So I think that this is something that could maybe be done in June or July with 6 months of data, but annualizing something after 7% of data has come in versus something that had an entire year to play out, I don't know what this means. At least they needed to show us what it looked like in prior Januaries. So if this chart showed us January inflows since 2005, it would be useful. Or, annualized all of them based on January. So I really don't like this chart. I think it's grossly premature by at least 6 months. I don't know what to think of it. It's possible this is the highest January inflow, but it's also possible it's not any higher than 2020 or 2021 was. I'm sure it's higher than 2022, but even 2023 is questionable. I mean, a lot of people exit at the end of the year, and a lot of people re-enter in the beginning of the year. And tech was hot going into the year, so it's possible people invested in tech only to pull their money out later and invest in other sectors, just like all the Ethereum people invested in Bitcoin leading up to the Bitcoin ETF. And the moment the Bitcoin ETFs launched, they pulled their Bitcoin out and converted it back into Ethereum. And that's why you saw Ethereum pop significantly the week after the ETF went live.
Tone, you know why I had this topic? Me and the other guys the researchers were having a conversation about the same. And when we had this conversation, I said this chart is wrong, and they said no, this chart is right. And I was like, no, it's wrong. They said it should be there, and I said put it, and I had have a chart with Tone about it. So I was of the same mindset as you were. That this chart is not right, and I totally agree. Like this January could be like high inflow, low inflow. We can't say anything until we see the January data across the years. Not Tone, that's one thing. Okay, fine, understandable. The chart is not good. Uh, it's acceptable. But then I have put another tweet for the performance of the Magnificent Seven this year, like as in like this year, right? Nvidia is up 46%. Uh, Metals is up 33.7. Meta is up 33.7. Amazon is up 11.5. Microsoft is up 7.4, Google is up 0.6, Apple is down, Tesla is down. Now, this is not like January. This is not just January. This is like the whole year to date again. What I want to talk about is like, fine, we have seen inflows. It's pretty clear. What's happening with Tesla and Apple? Like, there's a good performance across the board in most of the Mac 7. Is the Mac 7 shrinking into Mac 5 or Mac 4 now?
I don't think so. I think it's always going to be Magnificent Seven. It's just going to be a different Magnificent Seven. Like if Tesla can't go back up, it's going to get replaced by something else. I like the fact that it's seven stocks. I think five or three may be too little. So it's good to have your best seven. And if Apple and Tesla can't keep up with the rest of them, and I think they will, I think Tesla will recover. I think Apple will recover. I'm sure Nvidia wasn't even on this list 3 years ago. I'm not sure when it was added or who it replaced, but the Magnificent Seven's fine. You know, it's an index like any other index. You got to make sure that a company is, leaving this index for good if you're going to remove it. And nothing's perfect. And yeah, these are annualized returns. I think it's a little premature, but this is a little better, right? You can kind of tell which stocks have been up, which stocks have been down, and which stocks have been flat. And as I've said earlier, I don't mind just a handful of stocks being bullish versus the rest of the market playing catch up. So it looks okay to me. I think Nvidia is running a little too hot. Tesla is running a little too cold. Uh, something like holding the middle five while shorting Nvidia and buying Tesla could be a nice, hedge within this index.
Okay, you got some financial guru knowledge, guys. How to play this, but no financial advice, just some insight from Tone how he might handle the situation. Jamie, you joined us as a speaker. Do you have a question for Tone?
Yeah, thanks. So appreciate all the amazing content you guys have been doing. And if anybody hasn't been watching Financial Summit's YouTube channel, Matt and Tone have been killing it. Honestly, you guys have been doing great. My question is, Tone, how do you balance TA with the dynamic change with the ETFs and the wall of money that's constantly been coming each week? Do you think those are contradicting each other, where people coming into the ETFs will just buy just to get a 1% allocation no matter what? Just was curious how you kind of balance the two.
Yeah, I am. I'm mostly sticking to TA here. I think with these new ETFs, I think we're just gonna have a higher pump on the way up and a bigger drop on the way down. Unlike what happened with GBTC in the 2022 bear market, GBTC was not able to sell any Bitcoins into the open market. These ETFs will be able to sell Bitcoin into the open market. So I think these ETFs will allow the current bull run to be longer and more impressive than it would have been without the ETFs. But you need to be very, very diligent on identifying the next all-time high. Because when the market turns into a bear market, I think the bear market will also be longer and deeper than it otherwise would. Also keep in mind that there is some additional massive selling coming in GBTC from some of the court cases like Genesis and some of the others. But right now, the new ETFs are able to absorb, that kind of inflow. So that's really, really good. But I'm mostly sticking with TA here. I was more on the fundamental side. That's why I exited the market pre-ETF announcement. But now that we're a month into it, I'm back to just mostly focusing on TA, and it's all going to be in the charts.
Thanks. Appreciate it, guys.
Thank you, Jamie. Thank you for asking that question. So, Tone, when we talk about deeper retracements, I totally understand your point, and it was a very good question from Jamie because you said this in the last space as well, that we can see deeper retracements into the market because the ETFs will have to be selling, but the market will also mature, right? retracement, if we compare the retracement with the S&P or Nasdaq, let's assume adding some basically accounting for average to range ATR and basically the volatility in the market, accounting for that, we see that we basically compare how the S&P 500 or Nasdaq retraces after all-time highs or whenever it creates a new high, top, proper top. We do not see much deep retracements when the ETFs are in, whether it be any asset class. So why do you think that we'll have deeper retracements when it comes to Bitcoin? Tony, you're on mute.
Just the historical patterns. Bitcoin hits massive FOMO. It gets too expensive. No one's left to buy, and Bitcoin corrects quite a bit. But this time around, when Bitcoin corrects, the ETFs are going to be selling Bitcoin into the market, which will exacerbate the correction even more, making more people concerned, causing more people to sell. So I just see the same thing again, but this time it will be slightly amplified. Now, as was commonly known, each cycle of Bitcoin takes Bitcoin to a lower high by percentage. So the swings have been lower by percentage. Now, this particular swing to the upside could actually be very significant by percentage, but then we're going to pay for it on the downside after that.
Okay, so you are assuming that law of diminishing returns will not apply in this cycle, and we might see more returns than we might have seen last time. We might create a higher high.
It will still apply. The law of diminishing returns still applies, but it's going to be counterbalanced by these ETFs' existence in this next cycle. So I still see the law of diminishing returns applying, but it's going to be bumped up a bit by another factor because of the ETFs.
And it will be counteracted by when the cycle turns around and goes towards the bearish market. Okay, now I get your point.
Yes.
So you are saying, okay, because so my assumption based on the 4 cycles that we had is that always the returns have basically one third every cycle. So I was expecting a 300% return from wherever the halving happens. 300% from that point onwards would be a good return, or my assumption. So you are saying that maybe it will not be 300%, it might be 600% return. That would be like 2x or 2 times the factor of what return you were expecting. But then this is just me being a hypothetical tone. It's not like I'm telling you a number. That it could be a 600% return, but when the market corrects, it would also be maybe 2 factor of whatever you were expecting.
Correct.
Okay, makes sense. That's a very valid point. So thanks, Jamie. I'm gonna remove you from the speakers. Guys, if you have any other question. Oh, shit. He wanted to speak something. I've invited him again, Tone.
Okay, cool. I see Joe Calasari in the audience.
Yeah, Joe is here as well, so let me invite him.
Hey, I just had one last question. Yeah, so I'm just wondering, I guess it's maybe a 2-part. How does that play with let's say, the behavior of these ETFs? I've been listening to a lot of kind of Fred Krueger talk about people who are trying to get a 1% allocation, BlackRock saying 1%. Are those just buy and holders and they're not trying to trade and in and out? Would that maybe dampen the bear cycle if these ETF holders are just trying to buy in, keep it for the long-term perspective? And then the second question, and Joe talked about this earlier this week, about the effect that the options market will have if BlackRock can get an options market for their ETF. So 2-part, and then I'll step down. Thank you, guys.
Yeah, so the 1% allocation to the ETF, see what's likely to happen is if someone allocates or already allocated 1% to the ETF, and we end up in a huge bull market, that ETF allocation will become 2, 3, 4% of their portfolio. And when the market turns, they're going to be very interested in reducing that percent of their portfolio. So they're still going to be selling. They're not buy and holders forever. Also, holding ETFs make it very, very easy to sell, make it very, very easy to panic sell. So yes, someone could be entering right now as a long-term buy and holder, but if they are savvy in the market, they will try to take their profit when they think the market has topped, especially knowing that Bitcoin tends to go into these year-long bear markets. So yes, even that 1%er will contribute to the selling. As for the options on the ETFs, I am also kind of waiting for that. I really hope that they don't only allow options on the BlackRock ETF. I really hope that they're going to allow options on 4 or 5 ETFs, at the very least, BlackRock and Fidelity ETF, because I am holding the Fidelity ETF. And it's not that I'm interested in trading options on the Fidelity ETF. It's just that if options are launched only on the BlackRock ETF, BlackRock will have an unfair advantage with liquidity, and it just won't be fair. And I may have to switch my holdings from Fidelity to the BlackRock ETF if that's the only one that's optionable. Even if I'm not trading the options, I still want to hold the most liquid possible ETF. So I'm hoping that the options regulators hold out and open options on 4 to 5 of the ETFs at the same time, the way the SEC held out and approved 10 Bitcoin ETFs at the same time.
Awesome. Thanks, guys.
Thank you so much, Jamie. Thank you so much for your question. Guys, if you have any other question, please feel free to request or put it in the comment section. So, Tone, moving on from tech to AI, or to microcomputers, supercomputers, whatever it is. SMCI is down 25% from all-time high. The stock has been rallying. At a point, it hit a market cap of $60 billion. That becoming the 150th largest US company. And then in the same day, it lost more than $15 billion in market cap, went down 25%. So, Tone, if you can first of all analyze the chart and tell me if there was a MRI top, because I'm very curious about that. I have not seen the chart yet. Could you tell us a little bit more about what might have happened if you are aware of? And by the way, from technical perspective, the RSI was at all-time high of 97. Like 97 is like real high RSI, right? 100 is the oscillation limit. So RSI was sitting at 97 at that point of time. So, Tone, all yours.
I have no idea what happened here. What does the news say?
So the news is basically pointing towards profit booking. So there was a huge decline in the call premium, net call premium of SMCI, super microcomputer. And also it is there was an article which basically called for that the AI hype that we have been seeing in the last 1 year is most likely fading away. Let me find that tweet and put it in the nest for you, because that came from a very good source as well. So I found the tweet. Yeah. So the AI hype that we have been seeing in the last year or so basically is starting to show a little bit of decline. Obviously, it's just January data. It cannot be taken into account. But the tweet very well says that while AI stocks are still hot, the mentions on earning calls are down sharply. So that was basically, last year during like the September 23 earnings, which came in December, we were seeing a lot of companies talking about we are doing this in AI, we are doing this in AI and that in AI. This earning calls, a lot less companies were talking about AI in their earnings call. So that's
because they're realizing that they're probably realizing AI is just another person's computer algorithm. So as far as the technical analysis on this stock, and I have not looked at this stock. Wow, I'm like looking at it for the first time right now. The MRI would not have been very useful. The MRI was actually fully bullish. I would have been pretty much in this stock as the Friday's craziness took place. I will say that on a daily scale, Friday is corresponding to extension A and extension B topping. But as far as the MRI trend, we had a green star candle on Thursday. And as far as the weekly MRI, we were on the 5th candle. So we were halfway through the cycle. And as far as the monthly, we're on the 3rd candle. So the green star came last candle. So this stock was fully bullish across the board, other than daily extension B and extension A, which is a bit of a concern, but not as much of a concern as the bullishness across all the other factors. Now, as you zoom out, even on a weekly scale, this chart still looks very bullish. So if there isn't some kind of a catastrophe, like if they, had they written an AI bot that, like the Terminator that started, taking people out, I can understand the the scare. But I honestly think that this is going to be nothing but a small pullback. Stocks that crash out of nowhere like this because of some weird rumor or some AI bots started trading it down, and then others traded it down, and then there was just nobody else left to buy. This reminds me more of like the 1923 crash of the entire stock market. And then, everything was all right again. On a daily chart, we're still way above even the 20 period moving average. Like this thing can fall to 675 and then recover completely. So obviously, if I was long this stock, some kind of stop loss would have got triggered and I would be out of this stock. But I don't think I'm expecting all huge lows at this point. Like this is the kind of stock that I would consider buying the dip if it falls down to below 700. This is similar to what Bitcoin does every now and then. It's just up, 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 and then falls 20% for no reason in a single day or week. And then after a few days, it's all right again.
I basically was just looking at the weekly chart because I looked at the daily chart before because I saw the whole tantrum around it in regards of 25% fall, and I looked at the weekly just now, and this is such a healthy correction. Like I would, you're right. I mean, going down to 670 area, that would be the 0.5 for the Fibonacci retracement, and in the coming week would be like bullish for this, and I could see this stock rising from there and going towards the 2000s in the coming year. So I totally agree, Tone. That was a great analysis, and it does look bullish. So moving on, Tone. I want you to look at one chart since the charts are open in front of you. Can you look at Apple's chart? Because Apple is showing a very, very nice head and shoulder pattern which is forming. And we have already seen Apple is basically it's basically neutral, net zero if you see, like just 5% down across the year. So it's like not way down. But this might become a buying opportunity if this is a proper break of the head and shoulder pattern, and we are basically trading on top of the 200-day moving average as well. Hello? Tony, you're on mute.
Sorry. Yeah, we are still on top of no, we're not. We actually lost the 200-day moving average, I believe. Let me just change these charts to wait. Yep. SMA. Okay. We did lose the 200-day moving average on Friday. So I am a little bit more concerned for Apple. On a weekly scale, it still has some life in it. I would be careful in buying the dip in Apple. I would wait until Apple is back above 192 before going long on Apple, but that takes it back to its all-time high. I think Apple will struggle here a little bit longer. Apple had a pretty consolidated year last year, and it's been consolidating for a while. I would be cautious on buying the Apple dip right now. Apple doesn't actually move all that much. I mean, Apple is such a behemoth of a company. The horrendous pullback in 2023 only took Apple down 15%. So Apple doesn't move much. As an active trader, Apple would not be the stock I trade. It has very little volatility. I would stay away from Apple in general. Like of the Magnificent Seven, Apple is the one that has such little volatility. I'd rather trade other stocks. If I'm gonna trade Apple stock, I'd rather trade the S&P 500. Like the reason to trade individual stocks is to have some kind of volatility on highs and lows versus trading the index, like the S&P. And Apple just has no volatility. I'd rather trade the S&P and not take my chances on a single brand name.
But what about Nvidia, Tone? We were just talking about the Mac 7, and you said that you would rather hedge your position by going short Nvidia and long Tesla, right? Nvidia has their earnings in the coming week, and before this, we were discussing on the research call as well about Nvidia. So what's your insight on the Nvidia earnings? I'm quite sure you
This space was downloaded via spacesdown.com. Visit to download your spaces today.
have picked up your side on how you want to play that. You're muted, Tone.
Muted again. I'm muted again. We did something like this with the earnings for Coinbase. I actually want to pull up Coin stock right now and take a look. I did like a 5-minute analysis of Coinbase's potential off of the earnings, and I was very, very bullish with the earnings because Coinbase has been down for quite a while leading into earnings, and they've been crushing earnings. So I had a very bullish expectation. I have a slightly different expectation for NVIDIA. I think no matter what happens on the NVIDIA earnings call, I think there's a higher probability that NVIDIA is going to fall on earnings than rise. My biggest factor for this is in the last earnings call, the estimate was $3.3 per share earned, and they crushed it by announcing a $4 per earnings profit. They beat the earnings estimate by 20%. Now, the earnings before that, they beat the earnings expectation by 30%. Now, because they beat back in August when they announced, they beat earnings. The street was expecting $2. NVIDIA reported 270. They beat by 30%. So Wall Street greatly increased the earnings expectation to $3.3. So they went from $2 to 3.3. That a little higher than that. So they went up by like 70%. And they still beat it to announce $4, they beat it by 20. But what happened between those two earnings calls? Between those two earnings calls, NVIDIA did not do anything. Wall Street saw the earnings expectation so high, and they weren't sure if NVIDIA was going to beat that earnings. And that's why the stock didn't move between August and December. And guess what? They beat it, August and November, and they beat it. And they beat it by 20%. So between the last earnings call and the one coming up, NVIDIA is up massively. NVIDIA is up 50% in stock. So they made up for their cautiousness between the August call and the November call. And investors piled in to NVIDIA between November and this upcoming earnings call. Now, what is the expectation for the upcoming earnings call? The expectation is 4.6. So they went from Wall Street anticipating 2, then 2.36, and now 4.5. Now, 4.6. So 4.6 from 3.6 is obviously not as great of a percentage that it was from 2 to 2.33 or 3.6, whatever it was. But it's high enough. And the stock is already up 50%. It's also on a weekly MRI top. So I would be incredibly cautious on NVIDIA going into the current earnings call. I never hold a stock directionally in earnings. But if I was forced to hold a stock, this stock directionally into earnings, I would rather be short NVIDIA into this earnings than long. Last earnings is very different, okay? Because last earnings was preceded by 6 months of consolidation. This earnings is preceded by a 50% rise in the price, and the expectation on earnings is pretty damn lofty. That combination, along with this week being a doji candle and an MRI top with a yellow tone-based volume indicator on the weekly scale, throws a giant caution flag for me, and I would not want to hold NVIDIA. If my friends are holding NVIDIA right now, I advise them to take their profit on Tuesday when the market opens, because earnings is coming on Wednesday the 21st after market closes.
Cool. I think we have a question that. Hi, Amy. Let her connect and then we can let her ask a question. Okay, maybe she's trolling or something. Too many smileys. All right, let me let's move on till she connects. If she has a question or not, then we can see. So Tone, let's move on to Bitcoin. So these were all the tech talks and all the discussions in regards of the tech market. I want to move towards Bitcoin. Amy, did you have a question? You wanted to come up as a speaker? I guess not. Okay. Yeah, cool. So let's move on
to. Yeah. So I am actually, Amy has me blocked. So
Okay.
whatever that question was, I'm sure it wasn't going to go well.
Yeah, so I've removed her, so that's good. That's a great. Thanks for letting me know as well, Tone. So moving on to Bitcoin, Tone. First of all, we are basically kind of creating close to like the weekly close. We're 6 hours away, and the weekly close looks so damn beautiful. It's looking so bullish. I can't imagine. In my chart, I was looking at it, Tone, and I can see that's mine mini cup and handle pattern, a massive one, which is forming and which is completed now. I mean, it could come down and create a deeper handle, but if it breaks out from here, it's still a valid cup and handle for me. The volume has not kicked in yet in regards of weekly chart time frame. So, Tone, when you look at Bitcoin right now, you were looking for a little bit of correction when we last talked, and you said we could see a little bit of correction. We didn't see too deep a correction. We were just seeing inconclusive candles at the top of the move. What are you looking at now? Are you satisfied that this much is enough, or do you want it to go deeper?
I wanted it to go deeper off the MRI top. Now, the daily MRI top came in a few days ago on February 15th. That candle remains the high. Sunday only has a few hours left. I'm pretty confident we're not going to break the high of Wednesday, the 15th, or sorry, Thursday the 15th. So it'll be left up to Monday. Monday is a national holiday in the US. The stock market will not be trading. That reduces inflows into the ETFs. So Monday may not be a crazy up day either. So I am expecting some more consolidation here. I obviously expected us to fall deeper Friday and Saturday, but Friday was a nice up day. So that altered my view on what kind of MRI top this is. I went from expecting a deep pullback as of Thursday's reversal candle to not expecting a deep pullback after Friday's close. And now Saturday was a big down day that turned into a reversal candle, which created a positive volume spike on tone-based volume versus standard volume, but it had low volume overall. I'm now anticipating some more consolidation and then more upside next week. So yes, it can still go down, and this MRI top could remain, but right now we're still in a bullish count on the MRI. We never flipped the count, and we're not going to flip the count today. At least I'm not expecting us to flip the count today. And if we flip the count tomorrow, we would still need a red star candle the day after tomorrow. So as long as we don't have a red star candle, as long as Bitcoin is trading above $51,500 for the next day or two, I'm going to remain bullish, anticipating one more breakout. So that's kind of what I'm looking at right now.
That's perfect. Like, so in regards of like price action, you're still thinking if inconclusive. That's exactly what the candles are also trying to tell us, that yes, if it goes down, you see a red star candle, then you would turn a bit bearish for the short term. Otherwise, you're bullish. So, Tone, our open interest is, we were having this chat on the research chat as well. I'm quite sure you were reading it about open interest, right? Open interest on Bitcoin is currently sitting at record highs of $6.8 billion. How does open interest, Tone, impacts the market or the price? Could you tell our audience about it if they're not aware of it?
I'm sorry, can you just repeat that real quick? Like the broke up a little bit on my side towards the second half of the question.
Yeah, sure. So the open interest is sitting at around $6.8 billion on Bitcoin across all exchanges. And I was wondering, like, how does open interest impact price action? And like, what do we, when you see open interest being this high, what do you expect the market to do?
So I'm not sure what kind of open interest we're talking about. So to me, like the only open interest that matters to me is the open interest in the options market. I don't pay attention to open interest if it's not in the options market. And within the options market, what open interest is to me is how many options are there outstanding. Okay. Now, when it comes to futures markets, it's a little bit different because that's the only other thing that could have open interest. But futures markets, they're, for every winner, there isn't like a linear loser. In the options markets, it's different. In the options markets, there is like an exponential possibility of an exponential loss. And that loss needs to be hedged by the underlying spot market. So when people refer to open interest in the futures markets, I don't find it to be all that useful. It can always go significantly higher, and it can always completely flip around and not have all that much of an effect on the underlying price either, because people can just settle their positions within the futures market. Maybe Joe can correct me here, but I never really paid attention to open interest in any market other than options market. And as an options trader, I had a golden rule that I would never break. Never hold more than 10% of open interest. So if I'm trading options on an illiquid stock, or the options market on a stock happen to be illiquid, or I happen to be interested in buying, say, 100 options on a specific asset at a specific strike, and there is only 500 of that option in open interest, and I am about to buy 100, representing 20% of the open interest on that entire strike of the option, I will not make that trade. I don't want to be the majority of the open interest, no matter how right I think I will be on that stock, because I will have a nightmare getting out in between the spreads. Which is why whenever people talk about open interest in Bitcoin, I tend to just ignore that discussion.
And that's what we were having a chat as well on the research chat. So guys, if you're not aware, so open interest can either go up or down, right? Or it can stay the same. So that there are only 3 phases of open interest. If you're not aware, open interest will only go up when there's a new buyer and a seller in the market. It will only go down when an old buyer or seller leave the market. Buyer and seller, sorry, it's not an or, it's a and, right? And it will remain the same if there is a new buyer but not a new seller, and if there is a new seller, not a new buyer. So when you look at open interest, there are a lot of other factors that you need to take into account, like volume, price, what is it doing, and everything. So that was just a bit of understanding on how to look at open interest. Okay, Tone, after this, obviously, Bitcoin, obviously, it's a weekend. We don't see much price volatility during the weekends most of the time. And even if we see some, it could basically, reverse out pretty quickly. But ETFs, our weekly analysis, Tone, how are we looking when it comes to ETF inflows and outflows as well?
Yeah, we're looking really good. I don't have the last week's data yet. Maybe I could I can glance at it right now, but I haven't put that together yet. When we do this space on Wednesday, I will have the data for Friday's close, but I don't have all the data for Friday's close. I tend to wait till Monday afternoon to make sure I have the final accurate data for Friday's close. But the data as of the week of the 9th, so the last full week, it was awesome. The inflows was 23,000 Bitcoin more than the outflow. So the outflow from GBTC was 9,500 Bitcoin. The inflow from all the other ETFs was 33,000 Bitcoin. So that leaves a net positive inflow at 23,000. And that was the big up week. Not the current week we're on, but the week before, that huge candle. Hence the 23,000 inflow. Just for reference, every week, 6,300 Bitcoin is mined. So 6,300 Bitcoin gets mined every week, but 23,000 Bitcoin got locked in to the ETFs. additionally, right? Because remember, GBTC is still bleeding. The day GBTC stops bleeding or becomes bleeding in an insignificant way, and I am hearing rumors that there is like 30,000 Bitcoin ready to be sold in GBTC from the liquidations of Genesis and some of the others. And yes, if they decide to sell 30,000 Bitcoin next week, the market will have a hard time absorbing that. But if that gets broken up into 5,000 cells every week for the next 6 weeks, that can easily be absorbed. And I say the majority of the retail people have already exited GBTC. And the majority of funds that were holding GBTC have already exited GBTC. So the only people that are left are longer term holders or the ones that are going to get out due to these liquidations. So I'm happy that GBTC selling has slowed down, but it will continue for a while. I can't wait to see the numbers this week. I'm guessing there was a net inflow of 10 to 15,000 Bitcoin into the ETFs for the week ending 2 days ago. But I'll have those numbers on Monday.
So there was a net inflow from what I can see was 6.8k BTC, BlackRock 4.3k BTC, Fidelity 2.3, ARK 2k, and GBTC sold 2.6k. So I think this is for a daily basis. Yeah, this is for weekly basis. This is for daily basis. So Feb 4th. Oh no, sorry, Feb 14th. So yeah, we'll wait for the data, Tone. I don't have the data with me as well right now, but we can wait for it. So Tone, one question that I've got this on the Discord as well a few times because people are kind of confused about all these inflows and outflows, and the Genesis news came out about the $1.7 billion or $1.6 billion, something around that mark, that they are now allowed to liquidate. What impact? We have seen a lot of selling that has happened in from GBTC, right? And when you talk about 1.67 billion right now, it doesn't seem like that much. So do you expect like a major correction because of that, or you expect the market to just digest it and the inflows will be able to take care of that?
I expect it to digest it. I also, if people are still digesting the Bitcoin ETFs, and the price of Bitcoin has gone up a lot after the initial pullback, and that upswing has caught many people by surprise. I bet you people are still waiting to buy into Bitcoin. They're either waiting for a bigger pullback, or maybe they're waiting for the price of Bitcoin to get back into the $40,000 range, or they're gonna, throw in the towel and feel the FOMO when Bitcoin is breaking 55, 56,000, and Bitcoin is getting closer to the halving. So once this mandatory selling of GBTC shares by some of the institutions that are going through legal problems, once that gets absorbed by the market, I'm expecting a big wave come in for more buying through the ETFs.
So you are saying the simple market psychology of FOMO will kick in and we will see a major rally upwards because of all the ETFs once they realize it. But Toon, we have been waiting for, so that means that's the best case scenario right now, not just the best case. I think that's the base case scenario because we were waiting for 36k, 38k, right? It never came. And we basically kept waiting and it never happened. Now those people are going to be waiting for 40k or 45k or whatever number they are waiting for, right? For my anticipation, I think 45k will be revisited to test the support zone. But if that doesn't happen, then yes, that's the base case scenario of FOMO kicking in the coming year.
Yeah, I agree. I mean, look, I anticipated 36. We hit 38, which is very close. And right now, if we are to get a pullback, I personally, 36 is still there, right? But right now, if we were to get a pullback, I would expect 44 to be very good support. So we're probably not going to go down to 44, maybe down to 48. And people expecting 44 are not going to get a chance to get in. But yeah, we'll see. I mean, look, the halving is drawing near, and this is going to be super interesting.
No, 100%. Like for me as well, 49 to 48K area is the major support area which I'm looking at. I do expect a rounded top to form and basically revisit that level and then bounce from there. So that's that. Hopefully that happens, and some of my orders which have been lying there get filled. If that doesn't happen, then well, it is what it is, and can't do much about it. So Tone, let's move on to the U.S. economic data for the coming week, the last week that has come out. I want your view on so markets are sitting at all-time high. Very nice, very healthy. Everything looks good. Bitcoin is looking healthy. S&P is looking healthy. Tech stocks are looking healthy. Everything is nice. Headline inflation is up to 3.1%. That's higher than expected. PPI, on the other hand, is also the PPI inflation is at 0.9%, above expectation of 0.6%.
Oh, I'm sorry. Did you say inflation is higher than expected?
Yeah, so the expectation was 2.9, and it's sitting at 3.1. So the expectations of last CPI was 2.9, and it's higher.
Why did I think that CPI actually beat expectations?
No, it was higher than expected.
Huh. Okay.
And it was higher than I think December as well. Let me just double check. I don't want to give false information in any way.
Yeah, so inflation came in kind of hot, and the stock market absorbed it just fine.
Yeah,
inflation came in hot, so more reason for the Fed not to fuck with the rate.
Yeah, exactly. Like it seems like your assumption of no rate cuts is basically playing out, because if the inflation keeps running hotter, then how can they cut rates? There's no way they can cut rates at any point of time. So that's my question. Like, these are the two numbers which people wait for, right? Jobless claims are also one of them, and let's see what the jobless claims were. Jobless claims rose by 212,000. Estimated was 219,000, and previous was 2,000. So it is down on the readings, but it's higher than expected, right? They were expecting lower numbers, and it's still higher than expected. So there are more people jobless. Inflation is still running hot. PPI is going higher, and the US retail sales have dropped by most, overall in nearly 1 year for the first time. Sorry, no, it's not dropped for the first time, but it has dropped the most in the last 1 year. So all the economic data right now is pointing towards no rate cuts. First of all, can you give your insight on the data that you are seeing in front of you, obviously, and then what is your expectation now? Do you change it, or do you remain the same the way you were?
I remain the same. I mean, I'm looking at the initial claims. The initial claims actually came in lower than expected, which is bullish for me. It means that more people have jobs than the government expected people to have jobs. The expected number of claims, so the expected number of people filing for unemployment was supposed to be 221,000. It was 212,000. So the amount of people seeking the unemployment check was lower than expected. And again, Jerome Powell and the Fed want to see more people unemployed in order to lower the inflation numbers. So if less people are filing for unemployment, no surprise that the inflation has slightly gone up, because if more people have jobs, more people can afford shit. And if more people can afford shit, inflation is going to stay sticky high. And that is another reason why the Fed has no reason to lower rates. And the stock market couldn't care less. And the stock market is still going higher because people are buying a bunch of shit. They are paying more money for that shit. And the stock prices of those companies is rising, while those companies are replacing humans with AI, giving them more and more profit. So this is a beautiful recipe for continued high interest rates to stick around, people struggling with their jobs because they can get replaced by AI any moment, and considering how long some people have been staying unemployed, they're no longer counted and they can no longer create initial claims. But because the economy is doing fine, people aren't getting fired fast enough for them to spike a single month's unemployment numbers into initial claims. That's basically what's happening with the economy. And let's see how long it stays this way, because it frustrates people, but it makes total sense to me.
So we have a comment tone from not a Fed, and I hope he's not from Fed. He's saying if the Fed actually cared about inflation, they would have still be raising rates. So do you agree with that point? Like I think I agree with that point.
No, not necessarily. So the Fed should have raised rates sooner. They should have started raising rates earlier. And if they had properly hinted at the market, they could have still raised rates a little bit higher. But in the current environment, considering they are saying that, like based on what the Fed has already done and based on what the Fed has already said, I think there was not much of a reason to raise the rate. Inflation is only running at about 3% right now overall, and their Fed funds rate is almost doubling that inflation. So that's good. That's okay. I think now that they've stopped raising the rate and they have hinted that their next step is going to be to lower the rate, the Fed raising the rate at this point will make the Fed look grossly incompetent. So while the market can certainly handle a few more rate hikes, I think the Fed has painted themselves into a corner where it's very, very challenging for them to raise the rate.
Okay, makes sense. And another question that he has posted is, why does almost no one exercises options?
Because it's annoying, mostly. So the reason why no one exercises options is because you have to buy the stock, and it's going to cost you a lot of money. One of the reasons why people trade options is either to hedge the stock that they're already holding, or to take advantage of a stock's move without laying out hundreds of thousands of dollars, perhaps millions of dollars. You can, it's a very leveraged position. So one of the reasons why I do that is so that I don't have to put $100,000 on a trade. I can just put $10,000 to $15,000 on a trade, and I can control $100,000 worth of stock. And I can do this with 10 different positions at the same time. So I would, of course, sell those options with 30 days to go before expiration in order to capitalize and not lose money on the theta if I'm long the option, or the other way around if I'm short the option. But in general, it requires a lot of capital. If you wanted to own a stock, you would just own the stock. So that's why very few people exercise options. And also, if you're doing something like a covered call, yeah, the option would get exercised and the stock would be taken away from you, and that's a lot more common. But the reason why people trade options is so they don't have to hold that stock. And another reason why, this may sound ridiculously silly, right? But if you've ever held stocks, you know how flooded your inbox gets. I still get emails from a litigation on a stock that I held a decade ago. I held this stock a decade ago, and I happened to hold this stock for just 3 months. But the 3 months that I held this stock, the company ended up getting sued over a time period when I was holding the stock. Now, the lawsuit came later. I had already sold the stock, but the lawsuit period happened backward. When you look backwards in time, the lawsuit was taking place during the time when I held the stock. And I still get these email claims that I am liable for that I can get an 8-cent reward by being part of this class action lawsuit against this company. And my mailbox still gets flooded with this. Now imagine getting that for 100 different companies because you held a stock at one point or another. I find this the most annoying fucking thing ever. So I trade options to avoid this mess. I don't know how other people do it. Maybe it's just me, but my inbox gets flooded with every single class action suit known to man. Can't stand it. When you do options, you don't have this issue. I know it sounds totally silly, but that's the reality of it. It's kind of like that thing. Some idiot unelected European official decided to force every website on the planet to make you click, I accept the cookies. And now you have to do it on every single website for the rest of your goddamn life. It's these kinds of annoyances never go away.
That's true. Well, I don't put my fingers in options apart from if we are trying to hedge something. So yeah, that's for me. Still prefer to own whatever I can. Maybe I'll once I start receiving those emails, maybe they are going to my spam folder. But once I start getting them, I might do the same. So Tone, those are all
You've gotten those before, right?
yes. In the Indian market, yes, you get it.
It's
You get
crazy.
loads of them. Like not just that, like even if you have sold it, you still get their earnings and everything, and you're like, I don't care about it. So yeah, I totally agree. So yeah.
Yeah,
So
wow.
Tone, that
You avoid so much spam by being in the options market. I mean, look, options is very, very risky. You can blow up your whole account, but man, my inbox is so clean when I trade options. It's amazing.
totally true. I mean, it depends on how you're trading it. Like it's obviously it's if you're not doing covered calls or covered puts, like you can basically wipe out your whole portfolio in a matter of minutes at times if you're totally overexposed. But you can do the same if you're doing it with futures. Like if the future exchanges in at least the crypto industry are made in such a way that it feels more like a gambling exchange than more of a trading exchange at times, I feel, with the high leverage available and all those things. So I totally agree. If you're trading derivatives, guys, you need to be careful. You need to know how to position size yourself. You need to know, or you need to always have a stop loss, and you need to know how much you are risking for how much amount. So yeah, be careful when you're trading derivatives, guys. So, Tone, those are all the topics from me today. We could not get Joe. I'm sure he might be busy somewhere, because of which he could not come up as a speaker. But hopefully, we get him on Wednesday, and we'll have a lot more topics to discuss on Wednesday as well. So, anything that you want to add, Tone, before we close for today?
No, that's about it. I'm kind of enjoying this nice calm period in Bitcoin. I like this consolidation. If this consolidation continues into Tuesday, Wednesday, I think there is a way higher probability of another leg up than down. But if we're going into market open on Tuesday morning below 51,000, then I think we are going to be in for a correction. And this daily MRI top that we got last Wednesday will, hang around for a little bit. But yeah, good luck trading, guys. This is such a fun time with the halving coming up. And yeah, just gonna keeping an eye on the markets. Please follow the Financial Summit YouTube channel. You'll see me on there tomorrow morning with Matt McGregor.
So, were you short on Friday, Tone? Were you short
I'm
Bitcoin?
sorry?
What was your trade? What was your trade for the
No,
day?
my trade was long. My trade was long. So my trading in the trading contest on a daily basis is generally the complete opposite of what I'm doing with my real money. That's why I've been doing so bad in the trading contest, but I've been doing very well in my retirement account. So maybe I'll get those back in sync. But it's kind of great that by the trading contest positions are always the opposite of my real life positions. So either I look like a genius on YouTube or I look like an idiot on YouTube, but at least I'm making money to make up for it.
So you're hedging yourself, yeah, with
Yeah.
fake money. You're hedging yourself on the YouTube account with fake money. Is it, by the way, is it
Right.
real small accounts or just a paper trade?
No, it's paper trade.
Okay,
No, we
okay.
would never do it with real accounts because we put on a trade and then we can't touch it for 24 hours. That's not reality. I mean, maybe we'll do something different. It's kind of hard for me to have a real money account other than in the traditional brokerage because of regulation.
Okay, okay. Makes sense, makes sense. Well, thanks a lot, Tone. Thanks for your time. Thank you, everyone, for joining in and listening to us. This will be up on YouTube on the Financial Summit channel. So if you want to go back and re-listen, go through the whole thing again, you can basically we are one click away. Do subscribe to the Financial Summit YouTube channel and do follow us if you are not following us on Twitter. Thank you, Tone. Talk to you soon then.
All right. Thanks, man.
Bye.